Things are getting really serious out there. We have almost $1 billion worth of liquidations in the market just for the last 24 hours, and we were witnessing a major crash within the crypto markets in real time. Let's just quickly stop that. There we go. We're witnessing a major crash in real time with Bitcoin coming down massive amounts within those double digits. And there's a whole lot of very important data that we have to look at in today's show. So stay tuned until the very end. Smash the like button, hit the bell notification, and subscribe to the channel. And we'll start off over here with one of the biggest liquidation events that we've seen in years within crypto, literally since the FTX collapse, with now more than $1 billion worth of liquidity. $901 million taken from the longs over there and 142 from the short side. So this is a very critical crash, not only in crypto but in the stock markets as well. We'll have a look at why this has taken place, what you can expect next for the markets, and does this mark the end of the crypto bull cycle? Is it literally all over for another 3 years? Was it a left translated cycle and we've reached the end? Well, you can see absolutely no mercy over here on the Banter Bubbles chart on the daily time frame. Just the most of the coins, every single one pretty much down. I don't know if you'll find a single coin that's green in the top 300 to 400 different coins over there on the daily time frame. Just carnage across the entire board over there. And you can see over here, as per the S&P 500, the Goldman Panic Index is flashing extreme panic, and the last time that we saw this pretty much marked a major low within the stock market. So we're going to have a look at this and a whole lot more. Let's just quickly put the pause on that video over there. Guys, smash the like button. It helps to get the show content out there for all those people that don't know about the channel, because remember, we were of course one of the channels, at least on this show, where I outlined the stock market coming onto a major top. I put this video out over here literally 4 weeks ago. It was on the 8th of July, 4 weeks ago, about a month ago, saying that the stock market is coming on a top over here. The TD sequential, the 9 count over here, that is from a top trader in the stock markets who pioneered this trading system called 𝗕𝗬𝗕𝗏, right? The 𝗕𝗬𝗕𝗏 9 count over here. And what that suggests is that when you get onto a 9 count, that usually marks either a pause or a major top within the market, and you'd be looking for a 1 to 4 count. So they would be looking for a 1 to 4 candle correction. Where does that put us within this pullback, at least as per the stock market over here? Well, currently we've had 1, 2, 3, 4. So you are looking for this to come towards its end very soon, at least in the stock market. This is the Nasdaq on the top right. You've got the pullback. You're coming into a key area of major support over here. And then the same thing on the top left, coming into the S&P 500. But the stock markets are yet to open. The US equity markets have not yet opened, so we'll only find out later today. I'll make sure that I go on to Whale Room live during the US market open, and we'll be sure to trade that live to see exactly what's happening as the stock market does open and prices come down into these lower levels. You do have major support within that zone, so is now the time to capitulate? Probably not Coinbase as well, coming into that key $200 level that we outlined as a major buy the dip zone. And we'll talk about how we're looking for the major higher low within the crypto markets, and now that has not taken place, what that means going forward. So there is a lot to look at. We have also Warren Buffett coming up with a major cash pile over here, pretty much one of the biggest that he's hit, with 277 billion, which is pretty much as big as the entire Ethereum market cap over there. So massive positions over there from Berkshire Hathaway. But one thing that I would outline over here is that you have to understand that these guys are playing a very different strategy, right? If we're looking for major cycle tops within crypto 12 to 18 months from now, and we believe that's where the bull run would end, and that would be the same for the equity market. Remember that someone like Warren Buffett, with such a massive stockpile, would have to start to reposition well in advance. He can't wait like a retail trader to sell the absolute pico top, right? He needs to start scaling out of positions well ahead of time. So why has this all happened? Well, Japan raised interest rates Consequently, their stock market, the Nikkei 225, has pretty much posted its largest two-day drop in history, last seen since Black Monday crash of 1987. So a lot of mega bearish headlines out there. You can see over here coming down pretty aggressively. But is it all over? That is the question. Is the Japanese stock market going to crash the entire world economy and end this crypto cycle as a whole? Well, you can look at the chart over here of the Nikkei 225 index, and I still see it in a pretty parabolic advancement over here and actually coming into major support over here. Now, very simply put, the reason why this has taken place is because Japan has been giving out pretty much interest-free loans for the past couple of decades. And now for the first time, them raising their interest rate is creating immense panic because people realize that, well, they can't be buying stuff, that they have been previously that aren't necessities. And there's a big unwind that's starting to take place. And this does have a contagion effect that can spread into the rest of the markets. But chart-wise, you are coming into major support over here. And the question is, will the powers that be intervene to save the day? That is the question. You have Arthur Hayes coming in over here as well, a very, very seasoned trader. This is the founder of the BitMEX exchange, and showing the USD chart against the Japanese yen, just absolutely tanking towards the downside, something that he says that he hasn't seen since the massive earthquakes that took place in Japan over there. And then he goes on to talk about over here that he feels like they can do something more creative, like a BTFP back in March 2023. That simply means quantitative easing, where they print money to essentially save the day. It doesn't really save the day in the long term, but in the short term, it creates a little bit of stability. And he says the plebs in the US are very hip to the quantitative easing, rate cuts, etc., being inflationary. And he says not a good look for the Democrats, right, going into elections. They need some more smoke and mirrors, and this is what leads many to the opinion that this is coming next. Jerome Powell and the money printer, will he announce an emergency press conference today at US market open to save the day with some form of quantitative easing? Well, it is absolutely a possibility, right? You have Heinrich, who's been looking for a blow off top for a long time in the markets, and he's sticking strong with his bullish guns over here, saying, remember the largest recession and bear market since 1929, but with a big but over there, not yet, right? Now the cavalry will step in. Jerome Powell and his cronies will hit the money printer, and you also have Martini guy coming out, right? US Fed to call emergency meeting to rediscuss interest rates and the probabilities of rate cuts. We're looking for 25 basis point cuts. Now the probabilities are increasing towards 50 basis point cuts, which would be pretty substantial. So a lot to look at over here. If they do cut and bring in some sort of quantitative easing, well, maybe, just maybe, then you're going to start to see the market rally, right? So you have over here also Don Crypto Trade saying that with Japan blowing up and it's potentially being a systematic risk to other places, don't be surprised, right? If you see those emergency cuts and liquidity injections coming into the market. And we also have Jump Capital rebranding to Dump Capital, right? Why? Well, Jump Capital, with big market makers, have been dumping a massive amount of ETH over the course of the weekends when the rest of the markets were closed. And this has created quite a substantial dump on Ethereum, dropping down all the way back to the range lows. I'm going to show you what that chart looks like over here, but literally just dumping tens of thousands of ETH, sending prices towards the downside. And this is your ETH chart, right? Literally on the weekly time frame. We spoke about getting bullish only if you can get back above here. That is if you're a conservative trader. Of course, we're looking for a potential for a higher low in the making over here. But we said if you're a conservative trader, simply just wait to break above the yellow line, hold that as support at 3,416, and you'll have continuation higher back above the mid-range, which is this yellow zone over here. But couldn't do it, right? Pushback, started to see the wicks coming in there as resistance, and giga dump towards the downside. But with that being said, is the worst over? Is the worst over for Ethereum? Well, if you simply just look at this chart over here, and let's just zoom in a little bit to give you a little bit of perspective for what's taken place over here. You were in an ascending triangle rising towards the upside. You broke out of the top side of that ascending triangle. You met the measured move, which you can actually see over here. If you go from the base of the triangle to the top and you copy paste that over here. Once you broke out, you met the measured move, taking you to the top side of the range, and that's where the resistance came in, at least the mid-range over here. That's your top of the range. So you came into mid-range, a little bit of resistance, broke back down. Well, at the end of the day, this is going to be your major supporting trend line rising towards the upside, as well as your strong horizontal support, which is the zone that you've come into right now. So would I be dumping my Ethereum right now? Absolutely not. If anything, I'd be looking to establish longer term positions in ETH, because you are coming into major support. But if you're conservative, same as what I said over here, you know, you could have waited for a break over here and get above that zone. Now, what I would say over here is, if you are conservative, you can wait for a stronger reaction into the zone over here. You don't need to be catching a falling knife. Give it a little bit of time for price action to develop, right? You can also see the ETH BTC chart, which simply shows the ratio between Bitcoin and Ethereum. So if this chart's going down, then Ethereum is weaker than Bitcoin. If this chart's going up, then ETH is stronger than Bitcoin. Well, it broke down to the 0.04 level, which we spoke about a couple of weeks ago as a worst case scenario possibility. We've hit that level. There's the wick over there, but starting to put in a major bounce. And I'm going to show you why on the monthly time frame. ETH actually looks stronger than Bitcoin at the moment, right? A couple of other reasons, just elaborating on why this has all happened. So jump trading, offloading ETH, unstaking $500 million worth over the last 2 weeks. And the rumors are that they are leaving the market making business within crypto. You also have the US tipping off G7 that Iran might strike Israel within 24 hours. That was according to Axios. And then we have the momentum that Trump had, right? Flipping to now Kamala Harris. And Momentum Polymarkets, which is a betting site, shows that Trump was at 52% and Kamala at 45%, with the gap closing, with Kamala Harris now being or increasing at least in favor, and that's on Polymarkets, which is obviously scary for the crypto market, because Bitcoin, at least Trump labeled himself as the crypto Bitcoin president, right? You also have Korea Financial Authority sniffing out possible price manipulation in a veil during a Bithumb listing, and that might mean that there's going to be less listings into the Korean exchange, which is the majority of the volume that comes into the market from Asia is through these Korean exchanges. So something to keep note of. Now, where does this put us? What does that mean going forward? And what can you expect? Well, I did a big write-up as well in the Whale Room Discord, where I spoke about essentially the good, the bad, and the ugly. So if you do want the full take, it's under Captain's Take over here. The good, the bad, and the ugly. I did a whole write-up over here. There we are. We're family. We're all hugging each other, right? Even on the red days. But this is the good, the bad, and the ugly. If you do want that write-up, you can go there, but I'm going to give you a little bit of an overview of what I'm looking at over here. Now, simply put, usually around the halving cycle, it typically happens before that. The halving cycle is where the Bitcoin mining reward gets divided in two. The miners have to put in more and more work for less reward. This is mathematically built into the Bitcoin protocol, and that's marked off by the yellow line. It works on a particular on a particular block number where this gets divided in two, and happens every 4 years. So usually before that event is where we see quite a big sell-off, right? Price runs up, comes down over here, pushes up just before the bull market over here has a big red candle. Now, it doesn't look like much over here because I'm on a logarithmic chart, but take my word for it, it's in the region of 30 to about 65%, depending on which time frame. Then price moves up, grinds into the old all-time high resistance level, and explodes parabolically towards the upside. Now you can look over here. The same thing happened, right? You dump into the halving cycle again to give you a little bit of perspective. Price goes there, comes down 40%, grinds up into the prior all-time high resistance level, and then goes parabolic after the halving cycle. Here you can see the same thing with the COVID pandemic period. Price rallied up, came down. This one was an extreme case due to a black swan event with a 71% drawdown, grinds up into those prior all-time highs, and goes parabolic to finish the bull run. Now, this time we didn't see any of that, right? This time we just rallied straight into all-time highs before even hitting the halving event. So is it possible that we're going to play out that pre-halving dump that we usually have, but as a post-halving dump, and then still go parabolic at a later stage? Absolutely. That's totally in the realm of possibility. We're going to go over as well the percentage drawdowns and what you typically see within these types of environments and how long it could be before the end of the cycle. So just keep that in the back of your mind, that it is still possible that even though you're coming down over here, you might find a major bottom and then still continue on into new all-time highs. And we can look at this chart over here, which is where we've seen from a timing perspective, it takes from the previous all-time high to the new all-time high about 49 months, right? And then the next one, 46 months. So we've outlined 46 to 49 months, which is in alignment with what we've seen over here, that from the halving cycle, peak to peak, before the all-time highs put in, is between 12 and 16 months. So a lot of, agreement with the timing that brings you somewhere into the third to fourth quarter of 2025, which means that this is par for the course. If you do see these pullbacks into these lower regions of major support, which I'll bring up on the lower time frame charts, that becomes a great zone for the long term. Right now, this is part of the bad, right? We have the good, the bad, and the ugly. Part of the bad is that you have price failing the all-important SR flip level, flipping prior resistance into major support. You can see we've broken down that level and you're coming fast and furiously towards your next major support. Now, this would have been the worst case scenario, which we've already almost fully played out in a matter of a day and a half, would be a move down into this $40,000 region and then reaccumulation for the rest of the year, eventually reclaiming back above all-time highs and then continuing on to set in alignment with the timing, the cycle top somewhere in Q3 or Q4 of 2025. Now, it all depends on whether we're going to cascade very slowly out of here or very quickly out of here. And that's going to depend on the intervention by the Fed. Are they going to print money? Are they going to cut rates? These are the types of things that we need to look at. Now, this is the difference between Bitcoin and Ethereum right now. Ethereum is actually sitting at a much more technically better area of support than what Bitcoin is, because I have Bitcoin on the left-hand chart over here and Ethereum on the right-hand chart. Now, should you go through one of these pre-halving or in this instance, a post-halving cycle correction, we spoke about the significance on the monthly time frame of price reverting back into the 20 and 50 MA, which for Bitcoin is situated around that $40,000 region. If you look at Bitcoin right now, you can see it's hovering pretty far ahead of that level at the moment. Whereas if you look at Ethereum, Ethereum has come slap bang directly into that exact key zone, and it is holding a support right now at the 50 MA on a monthly scale. So ETH is probably right now at major support, and I definitely wouldn't be looking to sell that. But for Bitcoin's sake, well, the possibility of coming down another 18 to 20% is theoretically still on the table. And the reason why is because we took out the previous 2-week low. And I spoke about that. As well in the Whale Room Discord. We labeled this the safe zone. As long as you start to see price maintain and hold above that 21 weekly exponential moving average and remain above that, especially on a closing basis, right? That is very important. And as you can see over here, let me just check something, guys. Give me 1 second. I see people are saying something about the sound. There we go. All right. It is all on the correct sound, so hopefully it's fine. Hardest, let me know if there is any problems. So you can see we were remaining above the safe zone, but then of course we broke below the danger zone. The danger zone I labeled to the Whale Room community as 60,666. We said the devil is in the details, right? You take out this candle low and there's a possibility you're going to go into a capitulatory environment. And that's exactly what we saw, right? We broke below that scary zone. What this means for you is as we come into major support now, you should be looking for a bounce within the market. But then the billion-dollar question remains, what happens on the bounce? If the bounce leads into major resistance and a lower high, well, unfortunately, you may be in for a much longer term correction and a much deeper correction. And that's something that you do need to be aware of when it does come to those high timeframes. We've spoken also about the seasonality patterns that Bitcoin follows over the last 10 years. And what we've noticed is anywhere between August and the beginning or the middle of October is where you usually see those major bottoms, right? This is overlaying all of Bitcoin's price action over the entire tenure, the past 10-year period at least, so we have enough history to work with. And seasonally, we've seen that drawdown with a major low actually setting in between the end of September and the beginning of October. Now, we said that the market is forward-looking because the market gets smarter and smarter and looks at the prior data. And maybe, just maybe, they were looking to front-run this idea, which is why we were looking for a potential higher low. But obviously, we've had a capitulatory environment due to the contagion spreading from the risk in the Japanese markets, as well as the Fed being very, very slow to cutting interest rates. And now we're in this capitulatory environment, which you can see over here. JD says, it's crazy, we're on track for the biggest weekly drawdown in BTC since the FTX crash in November. And we can actually go back to this chart over here and we can have a look. If you go to the bottom, it shows the liquidations, right? Now, any time that we had liquidations that were this severe, it usually marks quite a pivotal change and point within the market. Look at the green bars over here. This is the amount of long liquidations within the market. And I will remind you on an actual chart what it looks like, right? So the last time we saw the fear and greed come down to these lower levels into extreme fear was during this FTX capitulatory environment. And this is where the question will come into play. How does a bottom form, right? Because a bottom can form in two ways. If the Fed get involved and they start to print money, you could have a V-shaped recovery. But if they don't, you might see a sideways price action environment like this where you chop and range. This is why you don't have to jump in and catch a falling knife, right? You can remain patient. Either you'll see intervention from the Fed, at which point, you know, V-shaped recovery becomes a possibility. If not, expect a ranging market similar to what occurred following that FTX collapse over here. And then you can play the range and be patient in terms of what you're looking to pick for the rest of the cycle. So with that being said, I don't believe that the bull run is over per se. I do believe that this is just a deeper correction, which you always outlined as a possibility, and the high low did not hold, right? We still need to see how the weekly closes. Very, very important. But fear and greed coming down to extremely, extremely low levels over here, as you would anticipate, right? So we'll keep a close eye out on that. In terms of the drawdown percentages, well, this is par the course, right? It's exactly what we'd expect. We've had 5 corrections, this being the 5th major correction. I'll give you a bit of a viewpoint within this bull market, right? Where did the bull market start? Well, we say the bull market started at the bottom, which is where the bear market ended. And ultimately, within those bullish phases, you look for 7 to 8 major corrections, because this is what we've seen within the prior cycles. We had the first one over here, the second one over here, the third one over here, the fourth one over here, and this being the 5th biggest and longest in terms of timing correction, with now sitting at, let's just quickly go back onto that, we are now sitting at 144 days into this correction with a price drawdown of 33.01%. Prior corrective cycles we've seen were sitting between 30 and 40% on average, right? And in terms of weekly corrections, if you move on to a weekly scale, it's one of the biggest weekly sell-offs that we've seen, with 18.46% as per what I just mentioned over here. Big liquidations. And usually following that, with the extreme fear in the market, you do see a bit of a move. Now, we're still looking at the breakdown of the DXY. This is the dollar index. If the dollar breaks down over here, this usually bodes pretty well for risk on assets, which Bitcoin and crypto is, right? Crypto is a risk on asset. It's treated the same way as the stock market, right? When this comes towards the downside and starts to break down, we've been looking at this for months now, coming out of this symmetrical triangle and starting to break down, with the stock market coming into major support. It all depends on what happens this week. We'll get our answer. Is this going to spike up or gain acceptance below? If it gains acceptance below the gray box territory over here, we're expecting a deeper correction, and that could be where you find crypto's bottom, right? The other thing that we're looking at over here is in terms of the leverage flush within the market. We also have the funding rate going negative. Now, within bull markets, every time the funding rate goes negative, this typically marks major bottoms. And I'll remind you of what happened at the FTX collapse, right? This was when the FTX exchange collapsed, the funding went negative over here. It marked the exact bottom with similar readings on those liquidations, with a similar drawdown on the weekly scale and look at what we saw next, right? So it's still very, very low over here. There is more leverage that could still be flushed out the market. But the point is we're seeing a major notable change over here on the open interest, right? Decreasing over here by 38.2% in a little over a week, going from $34 billion worth of open interest now down to $21 billion. So pretty much wiping out almost half of all the open interest over here. And there is speculation that somebody big in the crypto sector, like a massive hedge fund or institutional investor, has been smoked, absolutely liquidated within this exchange. And this could be part of the reason why you're seeing this mega flush within the open interest. And this is why it's advisable for those of you at home who get into crypto to stick to trading spot, right? Spot simply just means that you're buying the underlying asset. If you go into the exchange, there's no leverage or derivatives or fancy things that are involved to give you more money than you actually have. You have $1,000 and you buy $1,000 of Bitcoin. That's it. You walk away. You're not taking $1,000 on 10x leverage trying to trade with more money than you have. This is what leads to these big liquidation events, which is exactly what we've seen over here. So we can look at price action in the shorter term, and you can see over here that we have hit major support, and you are starting to get a bounce over here between $50,000 and $52,000. Next major support is down at $40,000, and you can see over here, in terms of last week looking for a higher low potential, well, you did have the bullish divergence, right? We had the bullish divergence over here that we outlined when price was trading all the way down over here, and we look for the big move up, came to $70,000. It was not enough to push price through, and now you have the RSI fully resetting, right? Watch as price bounces up over here into the $60,000 zone. There's going to be a cluster of resistance coming into that area, and that's the question, right? Is the bull market on or not? Has the bull market ended? Well, if we do start to reject from the 60K level, that could be problematic and mean a much deeper correction, and something else is happening. Okay, has the Bitcoin hash ribbons blue buy signal on the top over here failed? In alignment with that bullish divergence that we saw last week occurring between the RSI and price, we also saw the blue buy signal as per the hash ribbons indicator, which showed that the miners were becoming profitable once again and looking to get back into the market. And usually, as the hash rate increases towards the upside, price follows through. Now, the hash ribbons indicators criteria would state that as long as price closes above the prior major lows that occurred, which would be these lows over here, then the signal is still valid. As crazy as this might sound, if you see this daily candle push towards the upside and close back inside the range over here above the circled area I have on the left, well, that would actually signal that the hash ribbons blue buy signal still remains valid over here, and it could be a very big bear trap, right? So pay attention. Price is coming into major support. We look to buy support and sell resistance, right? This is your first major level of support. If you fail to hold that level, well, your next big level is coming in over here at 44,000, and I'll just show you exactly what that looks like. You have this trend line over here. There you go. That started all the way from the bottom of the bull market, increasing to where the lows were found in September, and you'll find extra confluence and support in alignment with this order block over here at the horizontal level at $44,000. No guarantee that you even get there. Again, watch price action for the closing candle today. Now, I will also say for those of you out there who are new, I know there's many of you new here today, if you do want to learn more about trading and analyzing the markets, I do have a free course. You don't have to pay 1 single cent. Go through to the link in the description below, click Whale School over here. As you come through to this over here, you have 16 days left to sign up. I assume after this show, the spots will be full. So please use that link, exact link below. Don't Google it. There's a lot of scam sites out there. Then type in your email address, click sign up. You'll receive an email of exactly how to join, right? It is totally free. You don't have to pay 1 cent. You'll deposit $100 into one of these exchanges, but that's your practice money. It's yours to trade with, right? You learn how to trade with that money. All right. So we've covered that over there. We have total 3, which is the altcoin sector, obviously coming down into lower levels. Major support for the altcoin sector will be found over here, right? Very close to that major support. That is coming from current price, should we come down a little bit further, percentage drawdown, you're looking at about another 10%. So a lot of the altcoins are coming into super critical key areas of support. And we can actually look at some of those altcoins today. Solana historically been one of the stronger ones, obviously breaking out of this bull flag over here, moving towards the upside, breaking out, coming back into major support at 160, but failing that level with the rest of the market. It is finding support over here at 120. This is a critical level. If Solana can't hold 120, $80 becomes the next major target. One that stood tall amongst them all, right? One of our top picks over here has also been Casper. Casper has now officially come all the way back to major support. Have a look at that. Very, very key level. I'll be looking to pick up some Casper over here. We've been long on Casper since 3 cents, which is all the way down here, right? 3 cents since this region over here. We're still up over 300% on our Casper position, but this is a significant zone, right? So for those of you who missed out on the Casper run and you still have cash available, that is an opportune zone to look for some Casper, right? We can have a look at some of the other coins. I did write a whole list. I have an entire list of coins. Let's quickly see over here. Give me 1 second. And I'll drop these also into Whale Room. I actually dropped into Whale Room today, which is the private Discord, some of the trades that I've taken over here. So I'll quickly go there just to show you guys. I went through to DJ calls over here, and I actually added some positions into PopCat, Book of Memes, 𝗕𝗢𝗕𝗣𝗢𝗕𝗏, Sonic 10, Inu. Yes, you heard that right. 𝗦𝗜𝗚𝗡𝗨𝗏, which is a cat, and Giga. And the reason why is because these are spot trades, right? No chance of liquidation, but it gives you that upside potential that leverage provides. I have drop that in there, and later on today we'll go through the rest of the coins. I'll quickly read out the list of some of the other coins that I'm looking at. Some of the coins that have come into key zones that aren't too bad. Chainlink, we have Casper, Solana, 𝗏𝗏, we have Ponky, Slurf, Book of Memes, Mog, Peng, PopCat, Giga, Maker's not too bad. Rune hit our level that we looked for a long time. Arweave, Banana Bot. So let's go through to a couple of those. Let's start off here with Rune. Rune, obviously, one that we've been looking at for a very, very long period of time, and it eventually hit that level that we've been looking for, which is the yellow line. Look at that. We're looking for a sweep of the yellow line. We said remain patient, wait for the sweep of the yellow line. Conservative traders will wait for price to break back up, but then this would become your confirmation, right? So you'd be looking for something like that, break back into the range, throw back with a higher low, and then you're looking for continuation. So if Rune continues down, though, where is your next major key area of support? I'll then be looking down to $2.25. But for the longer term plays, if Rune is as fundamentally strong as we speculated to be, I think that's a pretty solid zone to be looking at. One of the other coins that we've been looking at as a stronger coin, there's not that much history on this chart, but it hit the level perfectly, is $28.82. This is Banana Gun, which is a trading bot, right? A very, very successful trading bot. So you can go over here, Banana. Let's go to Banana Gun just to give you a little bit more price history over here. I think it's this one. And I will show you exactly what that looks like. And then let me know in the comments if there is anything else that you guys want to have a look at in terms of chart requests. Okay, is this going to load? There we go. Okay, so this is Banana Gun. You can see over here, this has been one of the darling childs of crypto in the sense that, you know, it's just been floating onwards and upwards with high highs and high lows until obviously recently with this flush towards the downside. But that's why we're viewing this as a very, very important area of support for Banana coming into this zone over here. Let's just pull that across. There we go, hitting that zone to the absolute T. That should be the range low. If the rest of the market does start to bounce, that is a key area to look at. And I see in the comments over there, you know, with the CME gaps, the gaps were eventually filled, right? So we can go back to that. Let's just have a look over here, portfolio. And we'll go onto the CME chart over here. Now we've created a new gap. The CME gaps, remember, that's created by the futures traders. When price moves very, very quickly towards the upside, you do tend to create these gaps. The last gap that we're looking at was over here. I'm going to quickly fill it out. There we go. You can see the gap between price. Let's just try that again. There we go. The gap between price over here, price came back into that zone, filling that area, and oftentimes you see these gap fills, right? Now you're going to have a new gap towards the upside, which is where you need to be careful of resistance, right? This gap is going to be over here. There we go. You got the gap. coming into that zone over there between $59,000 and $62,000. So as price does start to move up, and we'll change the color over there to make it clear, as price does start to move up, be careful in the short term of resistance if price comes down further, right? But if you can reclaim those key levels, if you can get above this zone over here, which is why that 60K level is going to be significant, then it could be looking good for continuation. So use the links below, guys, if you do want to join into Whale Room. Remember, if you're also looking for a crypto exchange to trade with, hardest, if you can bring the banter bags up. This is an amazing initiative that we have where if you use one of the exchange links listed in the description of the show below, you'll be entered automatically into the Banter Bags giveaway competition. We give away all of these coins, which by the end of the bull run are typically worth millions of dollars. It works like a raffle, right? As you sign up to each of those exchanges, you immediately receive a raffle ticket. And then at the end, we're going to pull that up and see who the potential winner could be. Let's have a look at one more thing in the Whale Room Trading Discord over here, just to see what's the story with the flows, right? If you have a look over here, I did make a post when you have a look at what's happening in terms of the cumulative volume deltas. Let's just say, is this not loading up over here? Let's just make it bigger. All right, a little bit slow over here. What's going on today? Okay, there we go. The negative deltas, it is loading up. Just give it a moment. We can see most of the deltas over here have gone completely negative, right? For some, what is this thing? Frozen. There we go. Most of the deltas have, of course, gone completely negative over here on Solana, ETH, Bitcoin. We have Pepe, WIF, and NEAR. Very, very negative deltas. This shows you that the short-term traders are continuing to attempt to short the market. Just be careful with shorting into the major support levels, right? Rather wait for the bounce if you're looking to short, and then short the lower high once you do get that bounce. That's something that I'd be looking out for over there. And then, yeah, let me know anything else in terms of the comment section. Some people say bear trap. In the greater scheme of things, absolutely, this could be a bear trap, right? When you go into the higher time frames like this, for example, and onto these higher time frames, you know, is the bull market over? Unlikely that the bull market's over, but is this a surprising flash crash, right? Absolutely. Is this a flash crash? Definitely. Is this a black swan event? I don't know if we can call it that yet. In terms of the drawdown, remember, this is still all within the realm of normality. Seeing a 33% drawdown from top to bottom within a corrective phase is totally normal. Black swan event, if this got down to 60, 70% within a bull market, that becomes the black swan event. So that's it from me, folks. Use the links below. I'll see the rest of you for live trading in Whale Room in the Discord. The link is below for those of you who want to join us, and I'll catch you all on the next one. Have a great day, and cheers for now.